Welcome to another episode of Mayor of Bitcoin. I'm not going to be doing any kind of dispute settlement today. It seems like the area has been quite calm lately, so that is what I like to see. However, I'm going to share with you some very interesting mathematical formulas I've created for helping to evaluate Bitcoin and the future. Whoa. All right, so let's go ahead and just get started. This is going to be a very mathy and could get quite long, so I'm going to just try to go through it top to bottom and then we'll play around. All right, so this is dealing primarily with the Lightning Network. It's it also applies for the block reset for the difficult setting every 2 weeks, but the block reset is 2016 blocks. The Lightning Network is 1000 blocks. So you can't really use you can, but I don't have my formulas set up to be able to calculate both things at the same time. So most of these formulas are going to be dealing with 1 week of Bitcoin blocks, which is the default lockout time of the Lightning Network. And I think this is going to get really interesting. I think you'll see, but I think you guys will like it very much. So let's talk about this. So in Bitcoin, we're used to saying something called transactions, and there's roughly 2,000 transactions per block, with a 1 megabyte block of 45% efficiency, with 225 bytes per average Bitcoin transaction. That comes out to 2,000 Bitcoin transactions per block. It's a little higher than that sometimes, but let's just pretend that's accurate. And then in terms of your average satoshis per byte, um, right now it's closer to like one or two. But for these calculations, we're going to say that it's 5 satoshis per byte to give us some wiggle room since the minimum is 1, I think. Um, and regarding batching, now this is a very interesting concept that hasn't been explored very heavily in the Bitcoin discussion boards. However, the higher ups are very aware of it. Paul Stork's Bitcoin Core leader. No, I'm just playing. But he's very aware of this type of concept. The people at the Lightning Labs are very aware of this type of concept, and you're gonna, as we go through this analysis, you're gonna um, be awed at the glories of batching. All right. So uh, if you use 5 satoshis per byte, um, then that comes out to, in terms of transaction fees per week for Bitcoin, that comes out to uh, 22 Bitcoins worth of transaction fees, which is about 0.002 Bitcoins per block, but 22.5, just divided by 1,000, but 22.5 Bitcoins per week, and 2 million Bitcoin transactions per week. Now, with this analysis, I'm going to say that the average Bitcoin transaction represents 2 actual transactions because of batching, and therefore there's 4,000 actual transactions, but only 4,000 per block, or 4 million actual transactions, but only 2 million Bitcoin transactions. 2 million Bitcoin transactions per week can never change unless you increase block size. Actual transactions can effectively scale infinitely with increased sophistications of batching. Okay, now, okay, got a dollar cost there. Now I'm going to deal with an attack of, effectively an attack on Bitcoin or attack on the Lightning Network. And so for this analysis, I'm going to say the attacker is attacking with the goal of disturbing the Lightning Network, and he's attacking over a 4-day period, and it takes 7 days to disrupt the Lightning Network. So he's attacking for 4 days, and then effectively hoping that the snowball effect carries him through those last 3 days. In order to do this, it cost him 12 Bitcoin to just make the minimum transaction, to spam the minimum transaction fee, which we're saying here is 5 Satoshi. This would cost him 12 Bitcoin to do that. And at $10,000 per Bitcoin, it would cost him $128,000. Okay, so in this analysis, our average transaction fees, our average Bitcoin fee is 11 cents per Bitcoin transaction. Okay, so we'll say that's roughly appropriate for what it is now. I know it's actually quite a bit less, but it's trivially different. So I'll be talking about the importance of trivial differences versus significant differences here. So the raise right here is how much the transaction fees are being raised. So in this situation, we're not under attack. So the fees don't actually raise. The fees for attack are the same. The amount of money spent toward hash power is the same. And then this is regarding the Bitcoin bonuses here. So during this week, we're going to pay out $125 million worth of Bitcoin bonuses. And we'll pay out $225,000 of transaction fees. So you can see those two numbers right there. And this comes out to a total, well, I don't get a total, but a ratio of fees to bonuses of less than 1% in fees for bonuses. Now, we are actually going to want to keep that roughly the same long term. And I'll explain why, but it'll get kind of complicated, honestly. All right. Okay, there we go. So some of this stuff is just kind of repeating information on this side of the screen. And the total Bitcoin fees per attack, which happens to be the same there, so it's all the same. And this comes out to a 10-minute block time. So I just put block time there because I was kind of exploring the idea of having a changed block time, but I don't think that's going to end up being necessary. And this comes out to a week. 1,000 blocks is roughly a week, or 6.9 days more accurately. Now, let's go ahead and look at the hash, the total hash that's going on. So, Ethereum spends roughly, these numbers are very rough here. Ethereum spends roughly $70 million per week on hash security or paying the miners. Bitcoin spends about 125 million, Litecoin 17 million, BCH about 13 million, and this is just an assumed number that there's somebody else using similar miners as Bitcoin ASIC, and all the other people combined total 30 million. This could be far less, but let's just assume this is the case, and this 30 million is just these two combined. So for a total mining pool, I should have shrunk that, but for a total mining pool of $186 million. Now this is a very relevant number, and I'll go into why. I'll say that now. So if Bitcoin ends up spending twice as much money on paying miners through transaction fees and bonuses or something of the nature, then their transactions, their gigahash actually doesn't increase because it's assumed that all ASICs built for Bitcoin are actively in use. Instead, what happens is the gigahash of these guys, they decrease by some percentage, and Bitcoin increases by some percentage of the total gigahash available. So if Bitcoin dollars spent for mining doubles, the gigahash for Bitcoin does not double because the total gigahash output does not change. However, the percentage for Bitcoin does change. So currently, Bitcoin's getting about 67% of the gigahash. These numbers a little off, but not really relevant. And then over here, I have a slightly different total going on. So this is in a situation if we reduced the, well, I'll go into that situation later. So now let's just talk about how this sheet works. This is mostly for, well, it was initially intended to explore the Lightning Network and the possibility of someone terrorizing the Lightning Network. So let's just say that someone wants to spend $50 million to terrorize the Lightning Network. What would happen? So if someone spent 50 million with our current setup, with the current setup, if someone spent $50 million to terrorize the Bitcoin network and the Lightning Network, so they did it over a 4-day period, that would cost about 50 million. And this is assuming that they don't own any interest in mining. If they own an interest in mining, like if they own 50% of the mining, then this costs 25 million. Okay. So that would raise the average Bitcoin transaction fee to roughly $45. So what this means is that if you had less than $45 on the Lightning Network, then you would not be able to make a new transaction on the Bitcoin network because you couldn't even afford to pay the transaction fee. And if you can't do that for an entire week, which is what we estimate here, then your Lightning Network gets reset to your original value. Now, this is not necessarily a problem. However, if you've collected money and your Lightning Network value is larger than what it started with, then you sort of lose that money as you get reset to what it started with, and you lose the money that you've collected over that time. Another possibility is that a group of people coordinate a system where they present false information, and then and then perhaps it could get a little bit worse. But I'm not even positive if that's possible. However, if if you've collected money and you can't pay the Bitcoin transaction fee over the course of a week, and nobody else verifies uh, your account on your behalf, which I think is possible, but I'm not sure, then you'll get reset to your original value. Okay, so that's why average Bitcoin transaction fee is important. So here the person is raising the Bitcoin fees roughly 400 times to $45. This causes the transaction fees for this week to escalate substantially. The amount of money spent on a hash for Bitcoin will increase substantially, roughly 70%, I say. And then what that will do to the block time is with this increased in hash power, assuming no new miners are entered into the network. So assuming our total GigaHash output does not change, only the percent of GigaHash actually changes. So we start off roughly with 25 billion GigaHash at the current time. And then in the case of an attack, where we have a 400 times increase in transaction fees, our GigaHash output is going to go to 29 billion. So it doesn't increase 400 times or anything like that. It only increases a very marginal amount. But this would create roughly 8.5 minute block times. So as you have more gigahash output, and since it's reset every 2 weeks, then the block times will actually speed up in the time while the attack is occurring, which will make the attack happen over the course of 6 days rather than the 7 days that people might be expecting. And then after the attack is over, when the hash resets to the natural value of Bitcoin, then the block time would go back to about 11.5 minutes, and 1,000 blocks would take 8 days to process rather than the normal 7 days. Okay, and then to go on a bit more about what this means for different things. And then down here, I'm going to go ahead and explain this part now. Okay, anyways, I'm going to go ahead and explain this part now. Now, in this scenario, I took the bonus reward that we have up there, which is currently it's currently 125 million every week. I took that and divided it by 4. So Bitcoin bonuses pays Bitcoin bonuses at a rate of 4% each year right now, and so I just took it down to 1% to see what would occur. So that's that there, and so you can kind of see where If you assume you do this and there's no change in the dollar value, that's of course wrong. But if it would increase substantially. But if you assume you do that and there's no change in the dollar value, then the percent, since the bonus reward is much smaller relative to the transaction fee amount, the gigahash actually changes very substantially whenever you have an attack. So if the Bitcoin dollar value did not change, then it would go down to from 25 billion gigahash today to maybe 12.6 billion gigahash. Still, still about double that of Ethereum. Well, in dollar value, but the gigahash is actually far, far, far bigger because Bitcoin is on ASIC and Ethereum is not 100% on ASIC. So it would probably have easily double the gigahash of Ethereum, even at a lower cost. However, compared to its neighbors and so forth, Bitcoin would still be maybe 10 times its closest neighbor in terms of gigahash. So here, if someone attacked the network, if you reduced the bonus payout by a fourth, and someone attacked the network or the Lightning Network by paying 400 times the average transaction fee, then your blocks would be confirmed rather than every 8.6 minutes like we got above, they'd start to be confirmed every 5.1 minute. Um, so why is that? That's because the transaction fee payout relative to the Bitcoin bonus payout is a much bigger percentage. So increasing the transaction fee by 400 times increases the market for GigaHash roughly double, which effectively takes the block reward in half. And then on the recovery time, assuming that this is where it gets a little funny, but assuming this went on for 2 weeks, which it only needs to go, all this data is for 1 week, but block reward is only adjusted over a 2-week period. But assuming it went for 2 weeks, and assuming that after the attack is over for that next period, people are happy to pay roughly 10 times what they were paying before, and 10 times will come out to like $1 average Bitcoin transaction at the $10,000 price. So in the attack, they're having to pay roughly $45 for an average Bitcoin transaction, and this costs the attacker roughly $50 million. And then post-attack, assuming that they're okay with the dollar, then the blocks are going to run about 18, 19 minutes. And so the attack in this situation, since it's by blocks and not actual time and dates, the attack is going to last for 3.5 days, and the recovery period would last roughly 13 days. Okay, so that kind of covers that. And so the main emphasis I want to place there is that if you have the transaction fee as a very significant percentage of the overall reward to the mining community as opposed to Bitcoin bonuses, then a transaction fee attack is actually much more difficult to be able to use to disrupt a network. However, that said, you also have to be very responsive as someone who uses the Bitcoin network. So let's pretend you noticed that the Bitcoin network was under attack. Well, with the other scenario where the blocks don't really change speed very much, you have 6 days to respond to the attack. Whereas in this situation where the blocks are increasing very fast to like Litecoin levels, you would have 3.5 days to respond to the attack. So that's something just to kind of keep in mind when it comes to the idea of having blocks that are heavily transaction fee based. Okay, so that's with a 400 attack. Of course, we could do a where someone spends $500 million attacking Bitcoin, raising the average Bitcoin transaction fee to $450, and you can see whereas in this situation the attack still occurs over 5 days, whereas in our other situation now the attack is over after 2.5 days. but that also means that you'd have to respond very quickly, and 2.5 days isn't a big response time. So, and like I mentioned, in the event that you're on the Lightning Network, and let's say in this scenario, people have given you money, and you now have um, more money than you initially deposited to start your Lightning Network system, but you could not close it out because the transaction fees were more than your Lightning Network value, then you have an issue there. Okay, okay, and it could get reset and you could lose money. Now, how does I probably should have opened with this. So Paul Storks talks quite a lot about something called he refers to it as drive chains and side chains. Some other words that people are kind of more familiar with is Lightning Network for drive chain. Effectively means roughly the same, and plasma or plasma cache could mean very similar to side chains. So I think it'd be good to think about these things in terms of plasma cache for people who want to have an easy understanding of what a sidechain looks like, and then Lightning Network for someone to have an easy understanding of um, what Paul Storks means when he says drive chain. Now I'm not positive, frankly, if that's what he means, but this is what I take it to mean. So now, the first analysis that we did here was just an analysis as to how much faster the blocks be would occur if you had a system where a transaction fees made up a majority of the hash payout, whereas right now they make up virtually none of the hash payout. Now I'm going to do another scenario here where I'm going to talk about the increasing value of the Bitcoin. So let's say if the Bitcoin went to a value of $500,000. Quite a few people think that Bitcoin could obtain a value of $500,000. I do agree with that, even though I think it might be some time, or it might actually happen a lot faster than people think. So Nick Zaspo has an article talking about um, the value of things being how much they can be divided. So in this situation, what I'm going to say is that we have a $500,000 Bitcoin. The average Satoshis per Bitcoin transaction, let's just bring it down to one, just so that you can see the initial formulas. Assuming that we are still on a 1 megabyte block, we are now having a $1 average Bitcoin transaction fee. So with a 1 megabyte block, at one Satoshi, you can at $500,000, you cannot ever get below $1 per Bitcoin transfer. Now, and then if you say that there's some variability there, let's just say 5 Satoshis, now you're looking at $5 per Bitcoin transfer. Now, is that going to work? No, it does not work for the public, because this basically means you can't use Bitcoin for things less than $10, which there's a lot of transactions that are less than $10. Now, how do you go about keeping the average transaction fee of, let's just say, 6 cents? And for this purpose, I will just say that no one cares about transaction fees below mostly $2, but 5 cents, 10 cents. Nobody cares about a transaction fee of 5 cents, 10 cents. Nobody cares about a transaction fee, too much of a transaction fee of $2. So here you can kind of see how in this scenario we have a transaction fee of roughly $6, and this is to send money over the Bitcoin network with Bitcoin having a value of $500,000. However, to arrive at that value, to arrive at this $500,000 number, then what I think you'll have to have is the actual transactions to increase to such a point to where the average transaction fee is still 6 cents or 11 cents. So the way that you get your actual transactions to be a much larger number than your actual Bitcoin transfers per week, because your Bitcoin transfers with our default scenarios are limited to 2 million per week, no matter what. There's nothing you can do about that. Now, that's 2 million per 1,000 blocks. So in the event of an attack, it's actually not per week, it's per 1,000 blocks, but we'll say 2 million per week, is you do something called batching. And for batching transactions, there's multiple ways to batch. You can batch the way that Coinbase and a lot of other places are batching today, which is you batch internally, and then you make 100 transact. You make one transaction every 10 minutes over the Bitcoin network, but this one Bitcoin transaction might account for 100 batched transactions, and you might do this every 10 minutes, one at the rate of one transaction uh, per block of Bitcoin. Now, another thing you can do is do Lightning Network batching. So, in Lightning Network batching, you can have a transaction every 1,000 blocks instead of every block. And this transaction every 1,000 blocks, instead of accounting for 100 transactions or so, maybe it accounts for 10,000 transactions. And then if you incorporate sidechains into this, then you might get another multifold situation where in this scenario, I'm going to suggest to you that under no circumstances can the average transaction fee and the price of Bitcoin to continue to escalate, can the average transaction fee exceed over roughly a quarter. Anytime it's over a quarter, too much. So, so here we can, now granted this is my assumptions here, but here we can see how if we take Bitcoin to 2 Satoshis per transfer over the Bitcoin network, even at $200,000, Bitcoin network is becoming expensive to use at $1 per transaction. At $100,000, it becomes expensive to use. At $50,000, we can still send transactions for roughly a quarter, so that would probably not disrupt anyone. However, if we batch transactions, which I'm going to say that we would need that the desire for people to batch transactions will increase linearly with the increase in price and the increase with the Bitcoin network fee. So here I'm saying that we're now batching 10 transactions for every one Bitcoin transfer. So you can kind of see how that works. And now we're having, rather than 2 million, well, I'm saying 4 million, rather than 4 million transfers per week at a $500,000 value, we might have 200 million transfers per week. These are overall transactions, not Bitcoin transactions, but overall. We might have 200 million transfers per week, but still we are always limited to 2 million Bitcoin transfers per week. Okay, now what does that mean? Well, if you have a Bitcoin, if you have a situation where the Bitcoin raises to a price of $500,000, then one, the Bitcoin percent of GigaHash compared to Litecoin, Bcash, and other coins, and let's just assume that these other coins don't increase in value at all. That's a little bit ridiculous, but let's just say that. So if they don't increase in value at all, if Bitcoin obtains a market dominance of 99% like it once had, oh, the glory days, no, 95%, whatever, then Bitcoin would effectively secure 99% of the available hash of all ASICs. And here it do a very similar situation. Now also, if Bitcoin goes to actually, let me just say $25,000. If Bitcoin goes to $25,000, again, it starts to secure like 83%. Now, to defend against a 51% attack from outside attackers, all you need to do is secure 51% of the network. Anytime you're over 51% of the network, you're far too secure. You never need more than 51% of the available Bitcoin network. So if we take it down to, and I'm trying to see if there's any value of Bitcoin where it's no longer 51%. So yeah, Bitcoin, if Bitcoin was to get a value of like roughly $5,000, then Bitcoin is roughly 50% of the available hash on the network. And if everyone else coordinated with against Bitcoin, then they could attack the Bitcoin, assuming that all known ASICs capable of mining Bitcoin are actively in use. So that's at roughly a $5,000 price. Okay, so let's just keep going here. Now let's just say the Bitcoin price goes up to $500,000, and we are now batching 100 transactions for every single Bitcoin transfer, and someone wants to disrupt the network. Well, previously they spent $50 million. Well, previously they increased transaction fees 400 times, and that cost $50 million. Now, if they want to increase transaction fees 400 times, it's going to cost $1 billion. So a very huge escalation. And then if they want to spend the same amount of money, then they're only able to increase the transaction fees roughly 20 times. Okay, so now an average Bitcoin transfer is 45 bucks. So you can see what we kind of talked about here previously, where this person is attacking the network. Our Bitcoins are getting batched at a rate of 100 Bitcoins per Bitcoin transfer, 100 transactions per Bitcoin transfer. Our average transaction fee went from 2 cents to 45 cents. So it's still not a number that people would balk at too heavily. However, the Bitcoin transfer fee, it did go up substantially. It went up from being able to use the network for a $2 value, but again, this is at a $500,000 price, being able to use it for a $2 value, and now in this situation, it's costing them $45 to use the network. However, the fees for attack has increased, blah, 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 blah. A lot of these these numbers over here don't really carry over. But okay, so that's the main thing I wanted to reference there is for the same dollar value at a lower price of Bitcoin, you get a 400x increase currently, whereas you could only get a 20x increase if the Bitcoin price was $500,000. And then also another thing to keep in mind about this $500,000 price of Bitcoin with the 1 megabyte block is that the minimum transfer fee for Bitcoin is roughly $2. And so if you had infinitely scaling blocks, if you had blocks of 2, 4, 8 megabytes, then this average Bitcoin transfer fee would constantly go down until it roughly got a rate of 2 cents, and you'd have no batching of transactions because you wouldn't need it. Because anything less than 25 cents will assume that people don't really care about batching too much. Um, so so that's the thing that I think is good for people to think about and to realize there is that if you have the Bitcoin network in such a way where all the transactions are going over the Bitcoin blockchain for an infinite level of scaling, and when you think of scaling, you want to think of price as the scaling mechanism. So if Bitcoin goes to a $500,000 price, then at this level of scaling, like no batching or whatever, it's now $6 to transfer over the Bitcoin network, which effectively means the price of Bitcoin won't go to $500,000 because then people won't use it as the $6 transaction Bitcoin transaction fee is too high. Now, if you have batching, then people will continue to use it, and then the price of Bitcoin at $500,000 is justified. Now, also with that, with all that kind of analysis that we were doing there, um, if you have a situation where the if you have a situation where the average Bitcoin transaction fee is very low, where the Bitcoin transaction fee is very low, then you can spend $50 million and increase the transaction fee by 400 times, which is a huge disruption of the network. So now people would have to go from a situation where they had no need to batch to where they're absolutely desperate to batch transactions if the Bitcoin network fee increased from an average of 10 cents to $45. And that would cost you $50 million. Now, if you say Bitcoin is worth a lot more money, and you say that people still refuse to pay a $5 Bitcoin transfer fee, then what they would have to do is resort to batching. And then if they had 100 transactions per Bitcoin transaction, then it gets down to 6 cents, which we'll call something around the happy point for people. Now, how do you batch? You batch. One is the Lightning Network, like I mentioned, which can batch transactions over 1,000 blocks and then send them to the Bitcoin network. And then you also have batching internally, which is batching every 10 minutes and sending it to the Bitcoin network. And then you can also have a sidechain. And a sidechain is would be a situation like Walmart or something could have a giant sidechain batching all their information together over 20 or 40 Walmarts, and then all those transactions could be sent to the Bitcoin network using that form of batching. So sidechains are kind of as similar to internal batching, with the main difference that you could, for example, have everyone in a town or a city such as New York. You could have everyone in New York use a New York sidechain, and then effectively all people in New York are now batched every 10 minutes using a sidechain into the Bitcoin network. Or they could be batched one day. They could be batched onto the Lightning Network, which batched up every 1,000 blocks onto the Bitcoin network. So you could have all these cities into sidechains, which which combine themselves into a Lightning Network chain, and then from there it's put onto the Bitcoin network once per week. So that's how you could have a huge number of batching examples onto the Bitcoin network. And then these actual transactions, you can kind of think about it as credit card swipes are your actual transactions, and then payments on the credit card, where you pay the credit card once a month. That's a Bitcoin transaction. So that's the type of batching that Bitcoin would necessarily need if it was to get in, if it's ever to get a value over 25,000 bucks. It's really around the $25,000 number that Bitcoin effectively becomes the average. The Bitcoin network itself becomes near unusable for people as transaction fees go over 25 cents. Because that just means for $5 and $1 purchases, you can't use it. So now you're going to go to another chain, and then once you go to another chain, well, are you going to really come back? And then at a $100,000 price of Bitcoin, we start getting $1 transaction fees. And again, that's just going to be too much for people in the long term. In the short term, it's not an issue, but in the long term, it's too much. So that's why you'll see a batching situation. Now, alternatively, you could increase the block size. Without batching, block size is the only way to increase your throughput. So the thing with block size that you want to think about is that it's relative to the price value of Bitcoin. And since the price value of Bitcoin is infinite, then the block size can also become infinite. So right now in this situation we have a $5.06 Bitcoin transfer, and then let's just say we want to have a maximum of no more than 1/4 for the Bitcoin transfer fee. Well, now we take this average Bitcoin transfer fee divided by a quarter, we get 22.5x, And then if you multiply that by 1 megabyte, then that means 22.5 megabytes per block. So a 20x increase in block size. So that's the thing that you want to think about in terms of the trade-offs between, and there's another trade-off here that I'll mention as well. But in terms of the trade-offs between whether or not you want to increase the block size or whether or not you want to increase batching, um, the issue is the price of Bitcoin. It's not the current use of Bitcoin. You don't want to think about the current use of Bitcoin. You want to think about the price of Bitcoin. And so if you speculate that Bitcoin could go from $10,000 to $30,000 even, then you're getting into a situation where you might want to start increasing, and you want to stay below 1/4 for a transaction fee. Then you already want to start increasing your block size. And then if the Bitcoin gets to $500,000, like I said, now you're talking about a 22 megabyte block, which is just obnoxiously big. Even though it's something that we might have to do, but it's much better if you can get 100 transactions for every single batched into one Bitcoin transaction. Now, another advantage of doing it that way is that if you don't rely on the Bitcoin network to send every single transaction, and instead, if you use the batching system, then if someone's terrorizing the Bitcoin network, it's so much more expensive for them to do so. So much more expensive. So let's just say the Bitcoin is $500,000 again, and let's say they want to make the fees go 10 times more than they were. Well, just to increase the fees only 10 times, it's going to cost them $50 million. Whereas today, as most transactions are sent over the Bitcoin network, to increase it 10 times, it costs them $1 million. So to get a 10x disruption of the Bitcoin network, it costs you $1 million today. And then if the price was substantial and transactions were batched, then it would cost you $50 million to do that. Now, if this was all handled through block size increase, if this was all handled through a block size increase, let me think about how that would play. So now you're trying to get a 10x disruption. You're trying to do this over a series. It'd probably even cost you more than this, maybe. I don't know. I'm not gonna even worry about that actually. Um, but it might cost you about the same to get a 10x increase. Um, but also you're getting with these whatever. Block size would be fine. That doesn't really change the attack vector of the spammer. Um, the main So yeah, either raising the value and the batching of transactions is one way to defeat the spammer. Block size is another way to defeat the spammer. But also keep in mind the real thing you're trying to defeat is the price of Bitcoin. And so you need the block size to either escalate with the price of Bitcoin, which here, if it's the 500,000, then the block size is and it's under a 10x attack for $50 million. Now the block size would need to be 225 megabytes to defeat the attack successfully without disruption. And then even under a normal basis, it'd need to be 2 megabytes, 22 megabytes per bot. All right, so let's think about this a little bit more. Now, one thing that people talk about a lot is the need to remove the mining centralization of Bitcoin. So that kind of covers the Lightning Network and the batching of Bitcoin. But we're going to also talk about ways to deal with the mining centralization of Bitcoin and how best to combat that. The issue with there's several issues, but the hash attack for the double spend of Bitcoin, which is what a lot of people think about whenever they think mining centralization, that's part of the problem. The other problem is that the distribution of future Bitcoins are being concentrated into very few hands. A third problem is that transaction fees are getting sent back to very few people. So regarding this attack where A 400x increase attack right now would cost you $50 million. If you're a miner who owns 50% of the hash power, nodes are irrelevant. Anyone who discusses nodes in Bitcoin today it's a very irrelevant topic to discuss nodes. If you get the hash and you spend and you own 50% of it, then you're going to get half of this money back. So this attack is much cheaper for you to perform, whereas it's 50 million for someone else to perform it. Now, if you own, let's just say 10% of the Bitcoin network, then this attack is roughly the same for everyone. But as Bitmain, Jihan, they own about 50% right now. This attack is very much cheaper for them to execute. And likewise, they get of this $125 million Bitcoin bonus every week, they get roughly 50% of that. So that's what you want to think about in terms of the problem with hash concentration. The double spend hash attack, while it's possible, it's less. It's only rewarding if you have a competing chain that you're chasing people into. So if you have Bitcoin Cash as an example, and you're trying to get this to replace Bitcoin, then a double spend hash attack, which removes the reliability of the network, is worthwhile for you. However, if you do not have a Bcash sidechain, whatever, an alternative cryptocurrency for people to, if you chase people out of cryptocurrency and you can't funnel them into your private chain that you control 100%. For example, if you chase people out of Bitcoin and they go into Monero or they go into Ethereum and you don't also control those chains, then you've just screwed yourself out of a lot of future money. The future money of 125 million every week or half of that, and the possibility of disrupting the network whenever you feel like it for half the cost of anyone else, those things are much more important to you than trying to double spend for the most part. So, all right. So I am going to keep going here. So now we kind of see what increases the rate of batching transactions. The price is the motivator for people to batch transactions. And we're already to a point where the minimum Satoshi per byte is becoming a very good motivator for people. So if Bitcoin went to $50,000 and let's say it was 2 Satoshis per byte, for simplicity, we're already at a quarter per transaction, um, even if there's nobody trying to spam the transactions. So it's already becoming quite a motivator. Now, let's look at these calculations. Some of these don't equate perfectly, but let's say that the Bitcoin price goes to $50,000, and let's just say it's not under attack. How does that change the amount of GigaHash we have on the Bitcoin network? So in this situation, we've not changed the Bitcoin bonus at all. We've not changed the amount of mining fee collection substantially, only to the minimum for the price. And how does that change our amount of gigahash? Well, currently we have 25 billion gigahash, and if the Bitcoin price goes to roughly $50,000, then we would end up in a situation with having $34 billion of 34 billion gigahash. So it doesn't increase 5x with the Bitcoin price, but it is more. It's very substantially more than it was before. Um, so what does that mean for us when we're trying to make these analyses? So if we get into a situation where we start motivating batching and effectively increasing the price of Bitcoin, because the price of Bitcoin is determinant on batching, and then also some other factors, inflation, which I'll discuss here in the future, then we can get the price of Bitcoin to go up quite a bunch. And then in terms of our hash security, we have way more hash security, and any kind of 51% attack becomes more difficult. Likewise, it motivates new entrants into the marketplace. So in a situation where Bitmain is the only people able to create ASICs, then creating a new demand for 50% more ASIC power doesn't benefit anyone else. It only benefit Bitmain, really, since they're making all new production. But as of today, we got the Halong mining people, and I'm not sure if they're going to be successful, but let's hope they are. And so if we wanted to motivate the Halong mining people to have a huge output to defeat the Bitmain organization, we could do that by escalating the increase in GigaHash demanded by the network. So the way that you escalate the increase of GigaHash demanded by the network, the primary way you do that is by increasing the price of Bitcoin. So if the price of Bitcoin goes to $15,000, then we're already escalating the demand for GigaHash on the network. Now, I'm going to talk about another scenario here. So let's just say what we wanted to do is permanently, regarding the distribution of this of the Bitcoin bonus. Regarding the distribution of the Bitcoin bonus, it's very, 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 very significant as a percentage of total Bitcoins. The total amount of Bitcoin bonuses that will probably go directly to Jaehan Wu and Bitmain is probably going to amount to roughly 20% of the total Bitcoin value ever created. So in other coins, we call this a pre-mine or something like this, but in the Bitcoin network, it's something of a post-mine situation. So what I would recommend, one system that I think would be very interesting to consider trying in terms of how to deal with this, because a lot of people are talking about a proof of work change, which to some regard I don't want to do that, because that's also like the block rewards, the block size situation where like Monero is going to have a proof of work change every 6 months, they're saying, or maybe 3 months, I don't know, to defeat ASICs. And I think it's a good idea to defeat ASICs overall. However, I don't know if that's the most effective way to go about it, because it is a big strain on the network, and there's also some what you would call agency issues, whether or not someone one day changes the proof of work to something where they already created the ASICs for this in advance. So one thing we could do, which I would be very interested to try, is make a proposal to change the Bitcoin payout from 4% to 1% of the Bitcoins at the current time. So if we changed the Bitcoin payout, let's just say instantly, to 1% of the total payout, then our gigahash rate would go to 12.5 billion gigahash. And what's interesting about going to 12.5 billion gigahash is that that is still more than 50% of the current gigahash level we have now. So even if we decrease the mining bonus, the Bitcoin bonuses, from 4% per year to 1% per year, we are still not vulnerable to a 51% attack based on the available gigahash that we previously had. If we would only get attacked by people who previously mined Bitcoin, assuming Litecoin and Bcash do not want to attack us. All right, so that's one example there. Now, if you decrease the payout of Bitcoin from 4% to 1%, one thing that would happen is anyone who had a monopoly on the Bitcoin network, they would immediately lose quite a lot of money. Now, Bitmain, this mostly would affect the Bitmain. Bitmain would lose a lot of money instantly if you change the reward payout from 4% to 1%. However, long term, this creates an insane amount of wealth for everyone else and would also help correct the Bitcoin system. So if we created a campaign to change the Bitcoin payout from 4% to 1%, and if it seemed to go through, then the Bitcoin price would probably escalate substantially. And let's say it would escalate to $50,000. That's much less than what would actually occur in reality. Just so you know, in reality it would go to 100,000 within 3 months. I can almost guarantee you. But moving on, let's just assume it increases to $50,000 over. It go to 100,000 in 6 months, sure. But let's say $50,000 in 3 months. So if that is the situation that occurs, then our gigahash level will actually be more gigahash than we do now, than we have now. However, that would be because we would consume 71% of the available gigahash, whereas currently we're consuming 67% of the available gigahash in the world for ASIC mining. Um, all right. So now to keep going with that, um, so what would happen here is that the demand for ASIC mining would actually increase, but the great thing about this is the distribution of future bitcoins to Bitmain and Jihan which is the primary concern here, instead of being 20% of the overall bitcoins to be distributed ever, Jaehan Wu and his associates, they might get something closer to 10% of the overall bitcoins. They probably have roughly 5% already. So they'd be splitting 1%, getting half a percent per 1% a year from here on out, effectively. So this would go down to this means that he'd only get 0.5% more new bitcoins every year, as opposed to what he gets now, which is roughly 2% more new bitcoins per year. So this fixes a lot of your distribution risk, which is a huge problem in the Bitcoin network. Is that the distribution of future bitcoins, are being concentrated into too few hands. So so changing it from 4% to 1%, yeah, you change your concentration rate from roughly 20% to Jaehan to maybe 10% or less to Jaehan Wu. So that's a great thing. And not only that, regarding the reward to the Bitcoin people, to the holders of Bitcoin, they would get a 500% return on their investment near instantly, which is great. So all the political drama necessary to create this change to go into effect would be worth the trouble. Um, and then at the same time, the hash difficulty of Bitcoin would actually increase, but it wouldn't be disrupted too terribly, as the price would actually change in advance of the hard fork. But you fix your issue with the distribution of Bitcoin being concentrated into too few hands, and you also fix the issue of um, well, you fix a bunch of issues, but I forgot. Okay. Now the other issue that I haven't talked about yet is terrorizing the Bitcoin network. So previously, to do 400 times transaction fee terrorism, it would cost you 50 million, but now it costs you $100 million to do a 400x increase. Or well, really, it's just five. It's just 5 times that. So it costs you $250 million to do a 400x increase, which means that the most you could, for the same amount of money, if you're committed to only spending roughly 50 million, then instead of doing a 400x, you could only do an 80x increase. So that's a great thing about having the price escalate, is that it makes changes in transaction fees for someone to spam the Bitcoin network. It makes it increasingly more expensive for them to do that. So now, let's just say long term, this also created a situation where the Bitcoin price went to $100,000 instead of 50,000, because roughly in 6 months it'd go to 100,000. So what would happen then is that the total gigahash demand on the Bitcoin network would increase from 25 billion currently to 31 billion gigahash, or a 30% or so increase in demand for gigahash, 25%, whatever. So that would mean that someone like Haylong Mining, who is creating a ov- overt ASIC to challenge Bitmain, that there would be substantial reward for people entering the mining operations. And if we created a huge of value, a huge run of value, um, and let's just say it got to something absurd, then what you would have is that the demand for GigaHash would be very, very, very substantial, and people would be rushing to get into the Bitcoin ecosystem, which effectively means that the chance for Bitmain or someone else to orchestrate a 51% attack would be so difficult to do that. It'd be so difficult to do that. So those are some of the topics I just wanted to talk about today. Just how the how the dollar price is dependent upon the cost of Bitcoin, of the average transaction fee, not the Bitcoin transaction fee, but the average transaction fee, and then how the way to increase the dollar value is to increase the level of batching. And the way that you increase batching is by using side chains such as Plasma Cache type of system, but Paul Storks talks about this quite a lot, or to use a Lightning Network type of system, or drive chains, as Paul Storks refers to this section. So, and then also, if you have a situation where you make the price, let's just call it uh, $50,000, and you decrease the mining reward from 4% to 1%, well, the bonuses per week actually goes up in this situation. Well, really, so long as Bitcoin goes over $40,000. Like if you go from 4% to 1%, then the bonus per week actually goes up. So, and realistically, it go well beyond this. So you'd have your bonuses go up to some number such as that. So, why is something like this good? Uh, why is it good to have your bonuses as a large percent of your overall hash value? Well, the negative side to that is that under the event that you're attacked, that in the event that you're attacked, having your bonuses be a huge percent means that your hash rate does not really substantially change, meaning that the attack is a long-term disruption to the network. However, on the plus side, you don't have a situation where you have a week's worth of blocks processed in 3 days or something like that if transaction fees were a very significant portion of your hash valuations. So now, also, a big thing about having your bonus level being substantial and your price being substantial. With the price being substantial, you're encouraging batching, which is ultimately the thing that will scale for price. And then when you have bonuses being substantial, then that means that someone, if they do an attack on the Bitcoin network, um, then this won't really show it here. This won't be able to show it, but it means that, like, let's say this. So a $50 million attack, if Bitcoin is at $50,000, that attack creates a 40x increase. Now, to create a 40x increase at 10,000, it's only costs $5 million. But okay, so a 40x increase. Now, if your bonuses are very substantial relative to your relative to the okay, I gotta change this. Relative to the transaction values, then what will happen is that your block times effectively will not change from 10 minutes. You can kind of see here, this is really the most accurate. I created a 40x increase, and my block times are going from 10 minutes to 9.8 minutes. And then after the attack is over, once the hash reward is gone, and my block times lengthen, which is the real concern for most people. Having a block that occurs in 2 minutes on average really isn't an issue, but having a block that goes from 2 minutes to 40 minutes to 2 minutes to 40 minutes, that is a huge issue. So now after the attack is over, now my blocks only increase to 10.2 minutes. So not a substantial change in block time. So that's why you want your bonus reward to be very substantial compared to your transaction fee reward. And as mentioned, to create a 40x disruption, it now costs $5 million, whereas if the value of Bitcoin was $50,000 or so, or 100,000, then creating a 40x disruption would cost, instead of 5 million, it cost $50 million. So, so that's something that you want to think about there. All right, and then the best way to go about fixing all these issues in a way that's most palatable for the community at large, in my opinion, and which does not change the proof of work. So all the mining operations would continue to function, and the long term meaning 3 to 6 months. Those who purchase miners would be making even more money than they do now. However, the percent of distribution of Bitcoin distributed into the hands of one person would decrease substantially. I would recommend the simplest action is one, everyone needs to be following Paul Storks and working with sidechains and drive chains and understanding Plasma Cash and the Lightning Network. These things, batching transactions, are going to be absolutely vital for growth. Increasing the block size with the increase in Bitcoin value, that's just not going to be able to do it for us long term. Sure, maybe bigger than 1 megabyte, but it really doesn't matter. The real issue is it needs to increase at the linear rate of price, which we hope that price does not. We don't want block size increasing at a linear rate of price. That's a huge problem. What we really need to have is batching. Um, so then, so that's what I've talked about today. Um, and I hope that you guys can understand some of this. I know it's a lot of stuff, and then also you can kind of see how uh, people can terrorize the Bitcoin network right now um, with very little risk relative. Um, to create a 400x or 1000x increase in transaction fees for over the course of a week, which could be used to harass people who use the default channel settings of the Lightning Network. One way to fix this, however, is to increase the default channel setting from 1000 blocks of reset time to 10,000 blocks for reset time. Long term, the more I looked into this, I think that one would only need to increase the blocks to roughly 5,000 or maybe 3,000 blocks. And the reason you got to do this is that you need these blocks to be more than the reset value of Bitcoin. Bitcoin is only set to adjust difficulty every 2016 blocks. So since the Lightning Network currently resets every 1,000 blocks, it's possible for someone to abuse the difficulty settings and absolutely ruin the Lightning Network. But if you get the Lightning Network to where it's 3,000 blocks, but anything over 2016, if you get it to where it's 5,000 blocks and there's two difficult adjustments in the interim, then you're going to have a situation where no one's going to bother to attack the Lightning Network because it would never be worthwhile. You'd have to sustain the attack over a 5-week period with two difficulty adjustments in the interim, which just makes the attack increasingly more difficult with each new difficulty adjustment, and take a longer period of time. So there is a value to having the attack come in a very rushed and sudden way. And so, like, let's just say someone was to spend $25 billion to attack the Bitcoin network, just for talking purpose, and this would make the average Bitcoin transaction fee $22,000 to transact over the Bitcoin network. This attack, people would have to respond to this attack within a 5-day window. and responding to this attack and coordinating a group of people within 5 days would be extremely difficult. So, granted, 25 billion is near a ridiculous sum of money, considering to attack the Bitcoin network, but 2 billion is absolutely not ridiculous. And this would increase the average Bitcoin transaction fee to $2,000. So this would be way more than what most people have in their Lightning channel, meaning that all their values would get reset whenever the thing occurred. And then again, they would have roughly 5 days. The community as a whole would have roughly 5 days to hard fork out of this before everybody over the Lightning Network lost everything. So, or not lost everything, but had everything reset. So, and $2 billion, you know, if you have an ownership interest in Bcash, and if you have a 50% ownership interest in Bcash, and it goes up by more than these numbers are off, but if it goes up by more than 25%, while the Bitcoin goes to $2,000 per Bitcoin transfer over the course of a week, so no one can use Bitcoin for a week of time, and that's really disruptive today. Uh, then you can easily recover this sum since you have the escape route that people are going to go into. If you control Bcash and Bcash is the accepted escape route, then you can easily recover this $2 billion. But now, just to reiterate one more time, if this is like $100,000 or something like that, then it's um, much more difficult to correct this. And also, your batching of transactions is going to go up substantially with this type of situation. Um, and the average Satoshi per bytes is going to go down. So, since people are batching transactions, they will naturally start to batch transactions as the price goes up. Then, even though you're creating a huge attack on the network, since people are already batching transactions, the average transaction fee would only go from up to $90 or thereabouts if a $2 billion attack. Whereas a $2 billion attack, um, without this, well, hmm, yeah. So without this, it would go to do 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 do. Okay, it would go to $90. So without it, it'd go to $900 for your transaction fee because people aren't by default batching. But if the reason that people begin to batch is not because the Bitcoin network is under attack, but it's because the price has, let's just say, linearly gone up in value to $100,000. Thus, they were encouraged to batch at 20,000, more encouraged to batch at 30,000, more encouraged to batch at $60,000. Then you will start to see more and more people batching. But if the motivation for batching is that someone is attacking the network and you have 5 days to learn how to batch, or you're going to lose all of your money, well, what you're probably more likely to do is just to use a different system rather than trying to figure out how to batch over the Bitcoin network in a very short amount of time, and in a situation where your Bitcoins might be decreasing in value because people are just terrorizing the network on the whole. So, okay, that was probably a bit longer than needed to. Sorry about that. But I hope people became a little bit more educated about how transaction fees and hash power and all that works in terms of the marketplace to some regard. All right, thanks very much for listening. See you later. Bye.